Hello everyone. In this uh, class, in this video class, let's have a discussion on the Unit 4 chapter Fund Flow Statement of BBA and BCom 6th semester Management Accounting. So let's see what is the concept of funds, how the flow is defined, and what is fund flow statement, and what are all the concepts of fund flow statements and the important terms we should understand to prepare a fund flow statement that we are going to discuss in this session. The purpose of measuring trading performance, operational efficiency, profitability, and financial position of a concern revealed by trading profit and loss account and balance sheet. These financial statements are prepared to find out the gross profit or gross loss, net profit or net loss, and what financial soundness of a firm as a whole for a particular period of time. From the management point of view, the usefulness of information provided by these income statements functions effectively and efficiently. In the true sense, they do not disclose the nature of all transactions. Actually, they do not disclose the nature of all transactions. Management, creditors, and investors, etc., want to determine or evaluate the sources and application of funds employed by the firm for the future course of action. Based on these backgrounds, it is essential to analyze the movement of assets, liabilities, funds from operations, and capital between the components of 2 year. The analysis of financial statement helps to the management by providing additional information in a meaningful manner. The analysis of financial statements helps to the management by providing additional information in a meaningful manner. Let's see what is fund. The term fund refers to cash or equivalent to cash, or it can also be referred as working capital and all financial resources which are used in business. So, what is fund? Fund refers to the cash or equivalent to the cash, or the working capital. It can also be referred as the fund can also be referred as working capital and all financial resources which are used in business. So these total resources of a concern are in the form of men, materials, money, plant, and equipments, and others. If we see in a broader sense, the meaning of fund refers to the working capital. The working capital indicates the difference between current assets and current liability. The term working capital may be gross working capital and net working capital. The gross working capital represents total of all current assets. Net working capital refers to the excess of current assets over current liabilities. So, in a narrow sense, if we see in a narrow sense, the word fund denotes cash or equivalents. So, in a broader sense, the fund denotes working capital. In a narrow sense, the fund denotes cash or equivalent to the cash. Now, moving to the flow or the flow of fund. You can say the flow of funds. The meaning of flow of funds, it means or it refers to changes or movement of funds or changes in working capital in the normal course of business transactions. Changes in working capital in the normal course of business transactions. The changes in working capital may be in the form of inflow of working capital or outflow of working capital. Any increase or decrease in working capital when the transactions takes place is called as flow of funds. In other terms, any increase or decrease in working capital when the transactions takes place is called as flow of funds. If the components of working capital results in increase of the fund, it is known as inflow of funds. If the components of working capital results in increase of funds, it is known as inflow of funds or sources of fund. Similarly, if the components of working capital affects the decreasing the financial position, it is treated as outflow of fund. For example, if the fund raised by way of issue of shares will be considered as source of fund or inflow of fund. This transaction results in increase of financial position. Like this, the fund used for purchase of machinery will be taken as application or use of fund or outflow of fund because it stands to reduce the fund position. Now, transactions causes change of funds or in working capital or the movement of funds, how it takes place. That's what we discussed. So transactions involving current assets and current non-current assets. Transaction involving current assets and non-current assets. Transactions involving current assets and non-current liabilities. Transactions involving current liabilities and non-current liabilities. Transactions involving current liabilities and non-current assets. Transactions involving non-operating receipts and non-operating loss. So no flow of funds is also there. Some transactions may not make any movement or changes in the fund position. Such transactions are involved within the business concern, like the transaction which involves both between current assets and current liabilities or between non-current assets and non-current liabilities, and hence do not result in the flow of funds. For example, conversion of shares into debenture. Such transaction involves between non-current account only, and the activity does not affect in increase or decrease of the working capital position. So no flow of funds, some transactions may not make any movement or changes in the funds. Such transactions are involved within the business concern. So like the transaction which involves both between current assets and current liabilities, or between non-current assets and non-current liabilities, and hence do not result in the flow of funds. For example, conversion of shares into debentures. So such transactions involves both non-current account only, and this activity does not affect in increase or decrease of the working capital position. So the transaction which changes in the working capital, the transaction which causes change of funds, so they are given in the screen, that is transactions involving current assets and non-current assets. So one current assets and one non-current assets. Transactions involving current assets and current liability. If there is any transaction between current assets and non-current assets, it contributes in changes of funds. Similarly, current assets and non-current liability. Similarly, transactions involving current liabilities and non-current liabilities. Current liabilities and non-current liabilities. Opposite, vice versa. Transactions involving current liabilities and non-current assets. Transactions involving non-operating receipts and non-operating losses. So these are all the causes, the transactions which contributes in change of funds or in working capital. The same, the flow of fund charts are given. So current assets and non-current assets, current assets and non-current liabilities, current assets, current liabilities and non-current assets, current liabilities and non-current liabilities. This leads to flow of funds. The flow of funds may include inflow or outflow. So what are those? Current assets and current non-current assets. Transaction between current assets and non-current assets. Transaction between current assets and non-current liabilities. Current transactions between current liabilities and non-current assets. And similarly, the current assets, current liabilities and non-current liabilities transaction. This four leads to flow of funds, which may be inflow or outflow. If you see this no flow of funds chart, so when transaction takes place, there will be no changes in working capital or there will be no changes in the funds. So those transactions are like this. The transaction which took place or which takes place between current assets and current liability. Similarly, non-current assets and non-current liabilities. This leads to no flow of funds. There will be no inflow or outflow of the funds. Now moving to the major, the meaning of fund flow statement. So fund flow statement is a statement prepared to analyze the reasons for changes in the financial position of a company between two balance sheets. It shows the inflow and outflow of funds, that is, resources and applications of funds for a particular period. So, in other words, fund flow statement shows the sources and uses of funds has left changes in working capital. It is a financial statement which shows as to how a business entity has obtained its funds and how it has applied or employed its funds between the opening and closing balance sheets dates during the particular year or period. In brief, fund flow statement consists of three items: funds, flow, and statements. Means that as I told at the beginning of the video, the trading account, the P&L account, and balance sheets doesn't show the actual reasons for flow of funds or actual reasons for changes which took place in between two balance sheets. So that's why the fund flow, to know the reasons for changes in amounts, the changes in funds happened between two balance sheets of a two particular period. So fund flow statement is a statement prepared to analyze the reasons for changes. So here the reasons for changes in the financial position of a company between two balance sheets. The balance sheet, when we prepare the balance sheet at the end of the year, it doesn't show the reasons. To know the reasons, the fund flow statement is prepared. So it is a statement. Fund flow statement is a statement which doesn't carry any what generally accepted rules or principles, and it shows the inflow and outflow of funds, that is sources and application of funds. The fund flow statement consists two parts. One part shows sources of funds and another part shows application of funds for a particular period of time. So with that, the management can see where the funds are utilized and where the funds are obtained. So it is applied or employed its funds between the opening and closing balance sheet dates during the particular year of period. So it is prepared for a particular year or period to know at the beginning how much funds were there and at the end how much funds were there and how these changes were happened and why these changes were happened. So in brief, fund flow statement consists of three items. So mainly the fund flow statement consists the three items. The one is funds and its flows and a statement. So where funds means working capital, current assets and current liabilities, and the second one is flow, the changes happened, and a statement which shows flow of funds for changes in working capital is called fund flow statement. So in simple word, a fund flow statement can be referred as a statement which shows flow of funds for changes in working capital is called fund flow statement. If we see some definitions, according to Anthony, the fund flow statement describes the sources from which additional funds were derived and the used to which these sources were put. So statement of sources and application of funds is a technical device designed to analyze the changes in the financial condition of a business enterprise between two dates as per the Fox. Now we need to understand some technical words to prepare a fund flow statement. So what are those technical words? So current assets, non-current assets, current liabilities, non-current liabilities, provision for tax, proposed dividend. So you can say the components of flow of funds. So with these components there will be a flow, inflow or outflow of funds for an organization. So what is current assets? The term current assets refers to the assets of a business of a transitory nature which are intended for resale or conversion into different form during the course of business operations. For example, raw materials are purchased and the amount used at the end of the trading period forms part of a current as stock on hand. And the second one is non-current assets, fixed or permanent assets. Non-current assets also refers to a permanent assets or fixed assets. This class of asset include those of tangible and intangible nature having a specific value and which are not consumed during the course of business and trade but provide the means for producing saleable goods or providing services. Land and building, plant and machinery, goodwill and patents, etc., are the few examples of non-current assets. Next, current liabilities. The term current liabilities refers to amount owing by the business which are currently due for payment. They consist of amount owing to creditors, bank loans due for payment, proposed dividend and proposed tax for payment and expenses accrued due. Next, non-current liabilities. The term non-current liabilities refers to capital and long-term debts liabilities. It is also called as permanent liabilities. Any amount owing by the business which are payable over a long period of time, that is after a year, are referred as non-current liabilities. Debentures, long-term loans, loans on mortgage, etc., are few examples of non-current liabilities. Next, provision for taxation. Which one? Provision for taxation. Provision for taxation may be treated as a current liability or an appropriation of profit when it is made during the year. It is not used for adjusting the net profit. It is advisable to treat the same as current liability. Any amount of tax paid during the year is to be treated as application of funds or non-current liability because it is used for adjusting the net profit made during the year. Next, proposed dividend. Like provision of tax, like what provision of tax, it is also treated as a current liability and non-current liability when dividend may be considered as being declared and thus it will not be used for adjusting the net profit made during the year. If it is treated as an appropriation, that is a non-current liability, when the dividend paid during the year. I hope you understood the concept of the fund flow statement. With this, I end this video. Thank you for watching. Thank you very much.